Hey, good morning. This is Chris with Suarez Home and Finance. Good. Welcome to Coffee with Chris. So this week we had somebody that was going to be talking this morning, but they had to beg out, and so that's okay because we have filled in the spot. So we're going to be talking about pre-approvals, which is so important to know. So on this morning, or this morning, right now, we're talking about the pre-approval process. So there is a difference between a pre-qualification letter and a pre-approval. So the pre-qualification letter is basically, I don't issue them and I never have in all my years of business because to me, they're just not worth the paper that they're written on. So a pre-qualification letter is normally, I cannot speak for anybody else, but it is normally based on just credit only. You don't want to be pre-approved or go out and look for a house if you've only been looked, if your credit has been the only thing looked at. Prime example, had a past client come to me. They were pre-approved or they were pre-qualified through a big, large bank. The loan was started, the appraisal was ordered, and they never even looked at income. The client couldn't even qualify for the loan because he was self-employed. And so we had to turn around and do what's called a portfolio loan, which is kind of outside the box. So anyways, it is so important to get pre-approved. So whenever we pre-approve, we are looking at credit, income, your debt ratio, where the funds are coming out for closing and down payment, all of the above. So I'm a firm believer that we need to get you set on a clear mortgage path. So what that means is to get everything set up front, including making sure that we know what loan type we are doing as well, so that we've got everything going. So in that, we're going to talk about, we're talking about getting pre-approved to purchase a home. So whenever we get started, whenever you call my office, then the things that we need to get you pre-approved is your last 30 days of pay stubs if you are a W-2 employee. I need your last 2 years of W-2s because I need to see what your history of your income is and then look at your pay stubs to make sure all that's in line. Did you get a raise? Did your income decrease? With COVID, a lot of people's income decreased because depending on what their jobs were, maybe their office shut down because people got COVID, maybe because they were in the restaurant business, whatever. So we look at the W-2s and also look at the pay stubs. I also need your tax returns. So your tax returns also show if you're self-employed or not, and those kind of things that I'm looking at. I need to see what your available funds are. Do you have enough money to buy the home? How much do you have to put totally into the house for down payment and closing costs? And then also what you are comfortable with for a monthly payment. Whenever I'm saying that, that means your taxes, your insurance, your principal and interest, and including mortgage insurance if you have mortgage insurance. So that is your total payment out the door. So that's what I go with. So whenever you're talking to my office, we are talking about your total payment, period, end of story, and your total closing cost, including everything, not just this section or this section like you hear people talking about on TV. Oh, we're going to pay your closing costs, so on and so forth. Your closing costs consist of a bunch of things. And so you need to make sure that you're aware of that because, again, that could be a blind side that you think you only need this much, but you really need this much. So we want to know what you're comfortable with for a monthly payment. So you can also still breathe. You can go and eat. You can go to the movies. You can do whatever. So we need to know what that monthly comfortable payment is. And that's where we try and stay around. If you find that wow house that is maybe $200 extra a month, if it works on paper for me, then it's your choice. Are you comfortable with that $200 extra because this is your wow house? So maybe you're not going to go out to eat as much because this is, oh my God, you're home. So those are the things that we're looking at. Again, also, so that's your employment history. Do you have a stable job? Is your self-employment stable with your income right now or with your employer? Have you been working there for 2 years? If not, then did you have any employment gaps? So on and so forth. So those are the things that we look at. So then our next step is like I said, we're getting W-2s and pay stubs. So I need the last 30 days of pay stubs. So what that means is if you get paid weekly, then that's 4 pay stubs. If you get paid every 2 weeks, then I need 2 pay stubs. If you get paid once a month, military, different jobs or whatever, you get paid once a month, then naturally I need 1. The W-2s I need, those need to match your tax returns. So that's how I tell a lot of times that you've had an extra job that you forgot to tell me about because the W-2s that you give me do not match your tax returns. So every W-2 needs to match your tax return. Those totals need to match. That's what I have to have. If you're on fixed income, so if you get Social Security, I have to have your Social Security awards letter that normally you would get each January, December to January. So you would get that each year because theoretically you get an increase each year. So we have to have that as well. So there's several different things that we have to have. If you have pension, we need to get your pension income. So that has to say that this is what I receive for, and it's for the rest of my life. And so those are different things that I have to have also. And so that tells me again what we're looking at. So on your tax returns, so if you are self-employed, you could have a Schedule C on your tax return. You can also have a separate tax return. So if you have that, even though, so we will ask clients, okay, well, what is your income for your self-employed? Oh, I made 100,000. Well, no, your 100,000 is your gross. I have to have your net. So that is the importance of me having your tax return. I have clients that have a negative, which is a good thing whenever you're self-employed because then you pay less taxes in my eyes, and in most people's eyes. So you have a negative, but there's still things that I can add back in. But whenever you're self-employed, your pre-approval is not going to be done as quickly as somebody that is salary, W-2 employee, those kind of things that are quick and easy because you already have it and because it is what it is. So self-employed does take longer. So anticipate, that taking an extra day or two, depending on how elaborate your returns are. If you have rental income, same thing. You have different things in there that we calculate. So that does take a little bit longer. If you are on fixed income, so fixed income, you get your awards letter each year normally, depending on what kind of fixed income that you get. But also, so we take your gross and then we can increase that by between 15% to 25%, depending on what it is. So you do get 1099s for most of those, and I do need those to show that you've got it. But most importantly is the awards letter. And I have people that, oh, no, I don't get an awards letter, so on and so forth. You do, but if you can't find it and you don't remember seeing it, Social Security, they have now to where you can go onto Social Security's website and pull that awards letter. So it is something that is required, and you want it to be because, again, if you got an increase, then you're going to, we want to see that increase in order to use it towards your purchase power. So that is something that we do have to have. I do require, but it's for your benefit. It's not just because I like asking for paperwork. So that's the behind on that side. If you're VA, then I can get a certificate of eligibility. If you're a vet, then you know what that is, I'm sure. And that tells me what your income is. So there's different things. Again, your W-2s, your tax returns, all pages, not just the first, second, or first one or two pages, depending on what your tax returns are and what all is included. I do need all the pages because there's other things in there that I can possibly add in, but there's also other things in there that could also hurt us. So we don't want to pre-approve you based on something that just the first two pages and then get blindsided at the end and say, oh crap, we should have had that. So now we're in trouble. So that's that part. And then we go to credit. Credit is a huge thing. So credit, whenever we're talking to you up front, my staff is asking you, do you know what your credit scores are? Most people know the general number, but we're also asking, where are you getting that number from? So if you've got that number from Credit Karma, FICO, or on whatever online source, if you got that number from there, our number is most of the time going to be lower because the same information is on the same credit report or on my credit report than what you see. It always should be. But the structure of how the number is calculated, your score is different because you've got a credit card and a car, which is what scores those most of the time use versus buying a home. This is the biggest financial purchase of your life. The score is calculated differently. I've had it on myself to where that I've pulled Credit Karma and I've pulled a mortgage pool just to see, because I needed it for something else. My score actually on my mortgage credit pool was higher than Credit Karma. That's not always the case. Sometimes it's right in line. Sometimes it's higher. Most of the time, it is a lot less. We've had somebody say, oh, my credit score on Credit Karma was 800. Whenever we pulled credit, it was a 500. So there's nothing I can tell you as far as why, except for the model that they calculate the number is different. Credit is a numbers and dates game. It is absolutely a numbers and dates game. So whenever we're looking at credit, we're analyzing that. We are not a credit repair, not licensed to do that, blah, blah, blah. But I've been looking at credit for over 30 years. A girlfriend and I started doing it probably 35, whatever, how old I am, 40, 30 years ago, whatever. So we learned what to look for and what works and what doesn't. And I've been doing it ever since. So if you are looking at credit, we are looking at, is there anything that you have do you have any credit cards that are over 30% that are a small balance so you can pay that down? Your limit versus your balance, that 30% is a huge game changer. So if you have a credit card that's $1,000 limit and you're over, the balance is over 300, if you pay that down just below 300, then your score can increase anywhere from 20 to 60 points. I've seen it happen. Prime example for me is a different situation is we were out of the country using credit cards to buy everything. I went over my limit by $35. My score dropped by 56 points. That's what a big deal it is. I paid down 4 credit cards below 30%. My score went up by 100 points because I did that. So it doesn't matter also if you have a $10,000 credit card or a $500 credit card, the result is about the same. So that is one of the first things that I look at whenever we need to see, can we get your credit score higher? Because we want to get your rate better. We want to get your closing costs better, your whole entire situation. Because again, this mortgage is over 30 years. So we want to make sure you are in the best situation that you can be. So that is one thing. That's the very first thing that we're looking at. Student loans. If you have student loans, we have to count a payment against you. So even if they are deferred, we still have to have a payment. Depending on the loan type is depending on what that calculation is. You will be asked for your student loan letters. So sometimes we had a client right now that's got a big student loan balance. His payment was going to be $1,299, something like that, or whatever a month. We got him to call the whether it was Navient, whatever it was, or whatever, got him to call and get an income-based letter. That income-based letter goes by his income, calculates the number, they give him a letter for it, and says, if you were to make payments today, your payment would only be X. His payment went from $1,200 and something, say $1,300 that we were going to have to count against him, to only, I think, like $100 and something. So we will ask you to call and see what your income-based payment would be, because some loan types allow for that. That's what we're looking at. That's what we're analyzing. And so again, it's to put you in the best position that you can be and to analyze everything to see where you're going to be at. If you have collections, do not touch them. If they are over 2 years old, then they may not really be affecting you. And if you it's called, people say or whatever, wake up a lying dog or a sleeping dog, whatever. If you do that and you go and dispute that collection right in the middle of us doing a loan or right beforehand, in some instances, I've got to get you to take that dispute back off. And what happens is that dispute freezes your credit to where that it doesn't affect your score. I have to tell you to remove the dispute, which unfreezes it, and now your score drops. So sometimes it has not dropped. I've had it also drop by 100 points before on clients. So don't dispute anything during this process. Let's take a look at it, see what's there, and see if we can get past it or not. Again, depending on the loan type, depending on the dollar amount, we may not have to touch it, but don't touch it in order to not mess yourself up. So those are some things. We're only 15 minutes in, so there's a lot more to it or whatever that I'll keep going. But the credit, there is the student loans, there is the collections, there is the credit cards. So those are the big things. So as far as the scores that you need, so when I have people come to me, they will say, well, I know that I need to have a 640. No, you don't. So I am a broker. So we go based on the credit or the loan type itself. So can we do like a 530? Yes, but I say that very reluctantly. The only way that we can do that low is if you have only medical on your credit report. So it really, really, really depends. And you're going to, right now with the rates, your rate is going to be astronomical if we can even get it done. And so most of the time we can't do something that low. So about 580 and above is about where the mark is, but that's for FHA and VA. So for conventional, I need a 620. A lot of banks, a lot of other people, they need a 640, a 680, a 700. I go by the loan type itself. So Fannie and Freddie is conventional. So that is a 620 is what I need. Is your rate going to be higher? Yes. Is your closing cost going to be higher? Yes. Again, that's why we're looking at credit to see, is there any way to get your credit score higher during the process? If you're not putting 20% down, your mortgage insurance is going to be higher as well. So you have mortgage insurance if you're putting less than 20% down on a conventional. And so FHA and VA, 580, but you really need, naturally as high as possible. USDA we can do in the 600s, but it really, really depends on your credit profile. Do you have collections? Why is your credit score that low? What is your debt ratio? So your debt ratio has a lot to do with it. And then, so conventional is the 620, FHA and VA about a 580, say for instance, plus, 580 or higher. USDA about a 600 or higher. Normally about a 640 is what we really like to see on USDA. So those are the scores that we're looking at while we're looking at credit to see where you're at. So we've got income, and then we've got credit, and then where's your money coming from? So your money coming from in when you're buying a house, we need to know what your total out of pocket that you're able to afford. If you're getting gift money, if you are getting, we're just doing a recap now. So if you're getting gift money, I need to know who is giving you that gift funds and do they have those funds available? We've now verified that up front. So we're contacting that person, whether it's mother, brother, sister, aunt, whatever. Hey, so-and-so said that you're going to be giving them a gift of $20,000. And you've got those funds, whatever, available now, so on and so forth. So we're verifying that up front so that we don't have a blind side at the end. Somebody gets mad during the process and says, I'm not going to give you the money after all. We have had that happen. So we want to make sure that we're not doing this all for nothing. If you have down payment assistance, we need to make sure that your down payment assistance is in place before we do the pre-approval. We can pre-approve you based on your credit and income and everything else, but we want to make sure that that down payment assistance is in place so that before you go and look for a house, because that down payment assistance is going to be, maybe it's only $10,000. If it's only $10,000, you are still going to need money for the rest of your down payment and closing costs. So we put that towards down payment, the rest of it towards closing costs. So we're looking at those numbers to see what numbers you need and how much you need in order to buy a home. If you don't have those funds available, then do not start looking yet. You can't go into a house. You're tying up the seller's house. Everybody's money. We're all doing this process, and then all of a sudden you don't have money. So you've got your hopes up, so on and so forth, but now all of a sudden you don't have money. So everybody is disappointed. You lose out on money. We've all lost on time. The seller has lost other offers that they could have done. So it's a whole entire situation. So we want to make sure that you are set up, again, for what mortgage profile you need to be, your scenario, based on your scenario, in order to go forward and see what direction we need to go. A lot of companies put you into automatically an FHA loan. Why? So if you don't know what your loan type is, then you need to ask, why is my loan type? Why do I have to go FHA? Educate yourself and ask the questions. So if somebody is saying that you have to go FHA, well, why? Sometimes it's because of your credit score. Sometimes it's because the conventional mortgage insurance is just too high and it's like double the amount of FHA. Sometimes it's your debt ratio. You can have an 800 score, but if your debt ratio is 55, there's no way that you're going to go conventional. So again, these are things that we're looking at. So there's so many facets to getting you pre-approved, but my name is on it. I don't want you to go and look for a house that you can't afford and get excited and put your money out there and, oh my God, this house is the one, and then have to turn around and pull the rug out from underneath you. That's not what we're looking to do. I'm not looking to set you up for failure. So those are the reasons why we do those things. So in order to get started, you just call my office. So we take about 15 minutes. So I'm asking you, my office is asking you, okay, what do you think your credit scores are? Where did you get the information from? Okay, those things we seem good. So now we're going to go to the next set of questions. What funds do you have available? Where are those funds at? If it's cash under the bank or cash underneath the mattress, I can't use it. Since the Patriot Act, it's not my rule, it's everybody's rule. No matter if you come to me or come to a bank, it doesn't matter. So I've had clients that, they get upset. Why can't I use my cash? Because it's green cash. I can't use it. It doesn't matter where you go, the rules are the same. You have to source where the money is coming from. So we've got credit scores, where are your funds at, where are they coming from? Do you have any junk is what I call it. Bankruptcies, foreclosures, liens, judgments, all that kind of stuff. Okay, nope, we don't have any of that. So we've got those 3 questions. So now the next thing is your employment. Do you have an employment history of 2 years? Where's your job? What kind of job do you have? So on and so forth, to where we make sure that you have stable income. If you're self-employed, okay, then it's not going to be quick and easy. So please get me your tax returns as quick as possible so that we can keep moving forward. Again, all pages, W-2s to match. If you have a business tax return, then I need the business tax return. Not an option, I'm sorry. But I have to have all pages. So if we set the expectation up front that, this is what I need, the quicker you get this to me, because rates are changing constantly, and now with the Feds putting it out there and so on and so forth, is the quicker that you get me everything, the quicker we can get you moving. And so time is of the essence. And so that is your tax return. So if you're self-employed, okay, it's going to take us a little bit longer, but get them to me as quick as you possibly can so we can get you moving. If you're fixed income, get me those awards letters. If it's VA, we can go in and we can have your certificate of eligibility normally within a matter of 2 seconds. So those are those different things. So we've got employment, we've got, we're crossing all the hurdles. Are you married? Do you have dependents? Have you been divorced? If you have been divorced, if you have child support, I do need the divorce papers and the child support. It has to be judge signed. If your divorce references a marital settlement agreement, I have to have that too. Reason being is because you may not have to pay child support or or receive it or whatever, but I have to see that in order to show it. Are you required to pay alimony? All of the above is in there. So we just have to mark that off that it's not a liability. If you do receive it, or you're supposed to receive it, in order for us to use it as income, I have to show a history of payments received. So for me, for a loan, if you are supposed to get child support and you don't, then I don't use it naturally because I don't get it. But if you're using down payment assistance, they have to count it again, have to count it as income. So now you may not qualify for down payment assistance. So again, this is why I need all of these things to be sure, because we're looking at the loan, but we're also looking at down payment assistance. We're looking at a whole lot of things back and forth. So the initial upfront is about 15 minutes. So we can get, I've got it so fine-tuned to where my staff has a list of questions. They go down those questions. And once we have those answers, then I can pretty much figure out which direction that you're going to go. Those questions also dictate and tell me, okay, is conventional out of the question? Is VA out of the question? VA is your first priority. So if you qualify for a VA loan, that is the number 1 loan. Number 2 is conventional. Number 3 is USDA. The last option is FHA. I do outside of the box, meaning that if you're self-employed, bank statement programs, stated loans. So those are not as risky as they used to be, but we have those. But there's a little bit tighter guidelines than there was like in 2005 and 6 and so on and so forth. But we can do those. Investment loans. Again, it just depends on your scenario. So that's why we're asking all of those questions up front. Again, about 15 minutes on the phone up front, get everything going, get me your income as quick as possible. We get credit, look at those things, analyze that, see where we're at. And then my loan partner 2 gets you on the phone. And so first you're talking to my loan partner 1, and then that's my front end person. And then you're talking to my pre-approval person that is taking all the information, getting with me. Let's get your loan scenario figured out, what direction, and whatever other additional questions that we have in order to get you pre-approved the quickest that we can. So that is that is basically the process, which is a long process. It's not a long process, but it really depends on you. The quicker that you get my office their documents and you get me all of the documents, all of the pages, so important, then the quicker we can get you going. So after we get you pre-approved, then you are pre-approved up to X amount with a debt ratio of this, with a loan type of this. Those can change if you find, a particular house. If you're, say, for instance, if we've got you pre-approved for a conventional, you find this wow house, but it's higher, you may have to turn around and go FHA because your debt ratio is higher. But we've got you already situated to where we're looking at the numbers. Also, whenever we pre-approve you, you and your real estate agent get a pre-approval email saying this is the criteria, these are the contingencies. But I don't give a pre-approval letter until you actually find a house. I can, but that is, to me, that's setting you up for possible failure. So I don't give a pre-approval letter until you actually found a house, because we run the numbers based on that house. Does that house meet the debt ratio, the loan type, your money is in your hand, your monthly payment, all of the above that you qualify for? Sometimes you can have a house on the left side of the street that's 100,000, which that's not anymore, but anyways, 100,000 over here. And then the house on the right side is 100,000, but the taxes on the left side is 100. The taxes on the right side is 200. You qualify for the left, but not the right. So that's why I do that. I make sure of what the payment is, because before you go look at the house and again say, oh my God, this is the one, I want to make sure that you're comfortable with the monthly payment. So not only does it work with the loan, but are you comfortable with it? So that is what we're looking at. So you don't get a pre-approval in 10 minutes. Again, the quicker that you get me everything, the quicker that we can pre-approve you. The letter, yes, I can give you a to be determined, but I don't like to do that because, again, you can do this house, but not this house. So it just depends on the house. Every house is different. If it's frame, if it's block, if it's the roof is newer, whether it's not newer. So there's so many different variables, and your real estate agent knows that and helps you with that as well. So we work as a team to do that. Your real estate agent also is there for whatever questions. They will answer your questions as far as the property and what you're looking for. I will answer your questions as far as the numbers are concerned. They will know basic information, but they're not going to know the ins and outs on your situation. So you want to make sure that you're speaking to the right person for their expertise. And real estate agents appreciate that as well. They are their job and we are our job. That way we work together. We're not giving misinformation, all of the above. So this is how pre-approval works. The process works. Once you're pre-approved, then you're ready to go. Go find a house, go find that one. And after you are pre-approved, I do request all of the rest of the documents as far as your bank statements, your IDs, your everything else. And I want those within 48 hours. Reason being, pre-approve you today, you find a house tomorrow, I need to hit the road running. So I need to get your loan going as quick as possible. So I want you to send me those documents. So again, I can see that you have that money. I know that you're ready to go. It makes the process that much easier and that much more exciting. So that is our pre-approval process. This is the way that I have it set up, and this is the way that I've done it for years. And if you've got any questions, my office number, I have two numbers. One is a Tampa, one is a 352 number. They both come into the same place, so it doesn't matter what number you call. It's on the screen. It's also on all of my information everywhere. So it's 352-754-6191. And website, SuarezHomeFinance.com. If you've got any other questions, please do not hesitate to call us. This pre-approval process does not change. No matter what the housing market does, my process is still the same. And I do this for a specific reason. So I make sure and get you set for your best scenario. We want you to enjoy the process. We want you to enjoy finding a home, whether it's your dream home, whether you're building a home and we're doing a construction loan, whatever the case is. So hope you found this interesting, or not, maybe not interesting, but educational. And hopefully this answered a lot of your questions. And if you've got any other questions, please, again, do not hesitate to call. My staff is waiting for your phone call. So this is Chris, Coffee with Chris, and we will talk to you later. Okay.